Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss this week in the market, a viewer's questions, and we begin fundamental analysis for Back to the Basics.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello? 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us. Pennies.
Going in Raw.
Featuring Dan, Deity of Dips, and Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Wednesday, September 7th, and still in a little bit of a downtrend. We're at 390. We had a pop up. I know we talked about it last week, and we've only had 1 day of trading so far this week, so not really too much to dive into. However, still went down a little bit. Gap down at the beginning of the day, popped back up, and ended around the bottom of the day, kind of. What do you kind of make of that, or is this just, hey, start of the week?
Yeah, I mean, part of it is the fact that, SPY has just been selling off open, and that's really been setting the tone for the following week or the following few hours. And so it's really not giving an opportunity to potentially getting back over those key levels to then move higher, because I think that's like kind of what everybody's waiting for. They're kind of waiting, at least even if you're bearish on the market, like you have to be short term, like, hey, where's the bounce? Because if we sell off again and we start getting down to like 285, 385, 380, that's when it's going to be like, okay, we got to bounce eventually. But I guess inside the same, as I'm saying this out loud, I'm also inside the same tone of like, how many times did we say this when we were going long, or when we weren't going long?
We never had a pullback.
Yeah, so I guess I should put my my foot in my mouth a little bit. But to your point about what is this? I think it's one of those things where we're waiting for that confirmation. Kind of like a breakout, retest of support, etc. And so far, it's just been smoke show, like right off open, and then we rally. And if you look at Tuesday, yesterday, you get a smoke show off open. We rally all the way back, we hit that level twice, and it's another smoke show. And then as Dan said, we close it near day lows. And so it's just giving no opportunity. It's just every time that we catch a bid, sold into. So I think at least for the short term, that's probably what most people are waiting for. I could see something like I really am against holding short here, because inside the other stance, I think that we could see something like a gap and go where, we gap up 1% on some news. It doesn't have to be anything crazy, but any kind of news. And then we go and we grind higher. And it could be one of those days where, before we go lower, we just stop as many shorts out as we possibly can. And so that's another scenario that I could definitely see happening. And honestly, probably the most likely one as we get closer to this extremely oversold area as of late.
Yeah, dude, in the corner of my camera, I just watched my cat just smack my dog, dude.
Little cat doesn't mess around.
Rescue.
Little cat don't mess around.
Oh, I mean, he like bites her tail and shit, dude. So he kind of deserves it a lot of times. I have to separate him when I leave. Do you think there's any like good news for longs to look forward to, or potential longs? I mean, aside from like, hey, a good pop from a Fed meeting or earnings season going good, like what is there to kind of put us in a good situation? Like what if Russia, Ukraine just stop, or gas goes down? Like what do we have to look forward to?
Yeah, I don't know. From a fundamental standpoint, of course, as we always discuss, the next inflation reading is going to be huge. But from like a macro standpoint,
and it's going to be huge based on the fact that last time they said inflation had peaked, and if it's worse, it'll be like they lied to us.
Yeah, I mean, and here's the thing: is I think we all, what's the word I'm looking for? It's okay. And this is getting into a broader subject, but since the 1960s, the approval and the trust inside the government as looking as United States citizens has gone down like tenfold. And I think that this little inflation, at least for myself, has kind of been eye-opening, because this is the first time I've ever, I don't want to say lived through it, because obviously, I was even alive during the .com bubble, but this is the first time that I've truly gotten to experience it inside my own thought process. And it's really interesting to see them just kind of sit there, and even back inside the March conversations, they were talking about inflation to 3% by the end of the year, and they're still, to a certain degree, singing that song and dance. But anybody who has a computer, you don't even have to know. You can just look up that kind of regression inside inflation has never happened. And it's not like we were going to raise, 400 basis points, like we were still going down the road of, we're going to raise 25 basis points. We're going to raise 50 basis points. Obviously we've seen us raise much more than that, but, it's kind of interesting, the fact that like, we're still on this bandwagon of like, inflation's going to be 3%. And I think honestly, I don't think anybody really believes it. It's just one of those things of like, all right, well, you said it, so, it has to have some degree of truth, this. And I think we're kind of holding on to that because, and not even stocks alone, the price of living has gone through the roof, which, obviously inflation plays a,
I think this is the first time I think like the average, I guess maybe younger millennials and Gen Z have really noticed the prices go up right in front of them. I mean, even me, I've never really noticed it. I mean, I've noticed sometime in the past when gas would go to like $4 or something, and then how much easier it was whenever it was $1.80, because I drove a lot going back and forth to work. But I mean, this is super noticeable. I mean, just like getting gas now, you're like, I'll get in the triple digits. I'm like, I never seen this before. Like, I'm not in a fucking massive SUV.
No. And that's the thing is that, and so here's the more difficult part about inflation. Obviously, where we're at in inflation.
Can you lower your camera a little bit or set up more? You're like a fucking Diglett off a fucking Pokemon. Yeah.
So I got literally
You're
shelving
still just
on
a
the
fucking
ground.
head.
Am I?
I guess it doesn't matter. There you go. Nice.
Is that good?
Oh, yeah, that's perfect.
So you can see what I'm building over there.
Yeah. No, your place looks great, dude.
Thanks, bro. Yeah. I got mirrors on the bed and stuff. But anyway, the difficult part about inflation, there's two parts to this, because as we always talk about, obviously the current price of goods through the roof, and that's really difficult. But on top of that, have you ever seen the numbers about how hard it is to get prices down once they've been up? Because basically it comes down to, even if, because, we talk about the supply chain, even if everybody inside the supply chain,
I mean, it's clearly fucking hard. We're having to go talk to MBS about lowering oil prices. We're having to do shit we don't want to do.
Well, the thing is that like we're a capitalist country by nature, obviously, and so the thing is that once supply chain comes down, and let's just say inflation comes down, stuff like that, it's really hard to get private or public companies that aren't state run, obviously, to bring down prices, because to them, they're thinking, hey, we had to suffer when, let's just say supply chain was through the roof, delays, etc. Now it's our time to be a little bit greedy. And let's just say that, something is going for $12 when 3 years ago it was going for $9. And now they can now bring the price down to $10. They're not going to do that because they feel that it's their time to clean up. And again, is that if you're inside, we are a capitalist country. And so if you are looking and the guy, you're kind of waiting for the guy next to you to lower their prices, because that's going to be what makes you lower yours. But if everybody is, again, thinking, hey, I had to suffer when supply chain was through the roof, now it's my time to clean up a little bit, then nobody's ever going to lower their prices. And that's the trend, is that every time that inflation has gone up, I mean like skyrocketed, and then it's come back down, that's fine. However, getting people to now lower their prices again is not the easiest thing. And that's why inflation is so difficult, because again, like, we're a capitalist country. And so I think like that's another twofold thing that, that maybe we're not really talking about that much. And as a country, because that will be another challenge when we do eventually get inflation down, which in my personal opinion, and this is purely regurgitated from data, I think that would be 1.5 to 2 years to get back down to that 3% range. And again, once we get back down there, it's not just about keeping it down there, which
what was it at before COVID? Before you get into that, like
3% to 4%.
Okay, so we're about tripled from what we're used to.
Well, that's why we were okay with giving out so much money and doing some other things, is because the economic landscape.
We've dealt with 9% before, so we were like, hey, I mean, worst comes to worst.
Yeah, but it's a little different because when we typically had high inflation, it was mostly it wasn't because we printed a bunch of money. It was mostly because of tragedies inside the world, or like a triple tumble action, like something like Evergrande can cause inflation to go up in China. You know what I mean? Like stuff like that. Like,
did we decide if it was Evergrande or Evergrande? Yeah,
I don't think we ever decided.
It was Evergrande because I was like, I think I've been saying it like Ariana Grande. Yeah. So I think, well, we're talking about the big boat.
Remember when like that would have been like the big news like 2-3 years ago inside the market.
Oh my God.
I mean, not that it wasn't big news, but
it was more of like meme worthy shit instead of like more people were making memes instead of being like, yo, this is a huge deal.
Yeah, like 20 billion. Like 20 billion is about to blow up. These guys were just lying to everybody. Like that would have been like a big deal. At this point, it was like, man, just add it to the list, which is just crazy. But yeah, so I went off on a little bit of a tangent there, but I think that it's important that, that we kind of understand that, listen, we will get inflation down like that. We have to, we have to, but don't expect like the average thing that went up to go back to the exact price. If something went up, like let's talk about the grocery stores. Grocery stores, some prices went up 150% over the last 3 years. Maybe don't expect them to go all the way back down. Like you might only be able to get them down 50% from here, which would still be a great increase from before. So it's just, something to keep in mind.
Yeah, no, it's bad when 50% drops still make it more expensive than what we were used to.
Yeah, and much more, like double, which is just crazy.
2020 hindsight, and it's funny because it actually was 2020. Do you think the government would handle stimulus checks the same?
No, God, no. They've done everything under the sun that they could to basically say we fucked up without saying we fucked up. Because again, they can't say that they fucked up, but they've done everything under the sun that basically says we fucked up. And again, I don't know. It goes back to 2008. Both of these situations are very different, however, very the same. Because again, what do you do? You know, like we could take Hank Paulson. Okay. And, you know, what does he do when too big to fail is happening? You know, like you got all the banks who basically control all the mortgages and control all the money inside, you know, the world going bankrupt and out of business. You know, what do you do? Do you let them fail? Because, again, they're private companies and we're the U.S. government. Or do we step in to try and control the bleeding a little bit? You know, but then what happens if they still fail? You know, like we can't just give them, you know, it's either we have to give them a blank check to stabilize the economy and stop a bank on runs, or we have to let them fail and God knows what happens. I mean, it could have made the Great Depression look like, and again, not taking away from the Great Depression, but it could have made the Great Depression look
any
like
80-year-olds listening, we don't mean to offend you.
Yeah. And again, like I'm probably very removed from it, you know, because I didn't live through it.
You had to be like 100 years old if you even were to feel the consequence. Yeah, you'd have to be old as shit, dude. It's in what, the 40s? Yeah.
But my point to it is that, you know, if we didn't step in and basically give a blank check, you know, God knows what would have happened or what the repercussions would have been. You know, again, is that we were already seeing a run on banks. And again, I'm going off on a tangent here, but, you know, it really puts the Fed inside difficult positions. 2008, like I said, is that, what do you do? Do you give them a blank check? Blah, blah. COVID hits. You know, people were comparing it to the
who do you give a blank check to this time to make up for the issue? Like how would...
Well, effectively everybody, you know, different than the big banks. You
the
know,
fucking gas stations.
Well, you know the saying that like 80% of your customer or 20% of your customers make up for 80% of your profit. You ever heard that?
Yeah.
Okay.
I don't know if that's true, but I mean,
well, you've been wrong on more numbers like workplace. I think it's used for like workforce. So it's like 80%, 20% of your workers
80-20
do 80%.
Yeah.
So similar to that saying, you know, when we were talking about the banks, it was like, okay, 20% of the businesses make up 80% of the money inside the economic, you know, cycle. Where now, you know, during COVID, it was like everybody is going to get screwed by this, you know, because again, we were comparing it to the bubonic plague. You know, like it wasn't like we could just patch a few holes. You know, we had to give everybody money because everybody and their mother was out. And you figure the New York Stock Exchange has only been closed a number of times, and it's never been moved virtual. And that happened while we were living in it. Like, it's crazy. Like for me, I don't even think like I've processed all of 2020 and 2021. It just feels like a blur sometimes. And again, like the Federal Reserve totally messed up. However, and again, Hank Paulson, you know, Powell, I don't know what you do. I really don't know what you do because, again, you don't give people the stimulus checks. They need those stimulus checks. But you give them those stimulus checks and you give them too much stimulus, and now we're inside this situation. You know? But again, what happens if we don't give them the stimulus checks? Are they just going to become homeless? I don't know.
Yeah, but I mean, like looking back on it, it was only like $3,000. Who just gave it so many fucking people.
Looking back on it, definitely a mistake. Definitely a mistake. Definitely.
Yeah, I mean,
at the bare minimum. Yeah. Sorry, go ahead.
Yeah, no, but I mean, you got to think there's political reasonings behind it, everything else, you know?
At the bare minimum, when inflation got over 7.5%, that is when we need to kick it into high gear. Because again, remember, like,
what do we kick into high gear?
Like raising rates and like the Fed starts tightening, you know, because the issue is that everything inside the government works so damn slow. So in March, we had put this inflation plan into place. You know, we're coming up on 6 months in, and we've just now peaked. like COVID, that's a long time, because again, it's not like overnight we got the Fed together and the Fed was like, hey, we got to do something about inflation. It was like, hey, like next meeting, we should probably do something. We should probably talk about inflation. And then they put the plan into effect. And then now we're 6 months later and they're claiming that inflation has peaked. So I think that that's part of the issue is that, when inflation got over 7.5%, that's when it should have been like, hey, let's put something let's put pen to paper here and see how we can, not let this rise anymore. Because again, inflation is one hell of a stone to get unturned.
All right. Well, moving on to our back to the basics topic, we did want to go into one of your personal favorites, and this is just episode 1 of the fundamentals. We kind of did some technicals. If we missed any parts of them that you'd like, make sure to leave in the responses, and we'll try and make it for one of the episodes where Hugh's in Greece. And for technicals, it does get kind of tough to do on a podcast just because of the lack of visuals. But one of them we did include charts and stuff, and we mentioned in the podcast. So diving into fundamental analysis, like we said, episode 1, where do you want to start? What is fundamental analysis? Why do you like it so much? I mean, it was how you began your trading strategies.
Oh, yeah. I mean, I really didn't find out about technical analysis until I was in the game for a little bit. Because again, when I started, there was only a few people that I was really paying attention to. And more importantly, the boy that I was paying attention to was the Buffett Warren. And that was like, that was
Buffett never did that.
Yeah. And so,
and for those who don't know, that was Hugh after he got his wisdom teeth taken out in the intro saying that. So I know every time we post that clip, people are always surprised that was actually you.
Yeah, exactly. They always think that it was a cameo or something. But let me see. So when I first started trading, like I said, is that the only person I was truly hyper focused on a few guys inside the industry, and most importantly, Warren Buffett. And Warren Buffett wasn't posting like pictures with VWAP on it, on his Twitter, saying like, hey, I want to bounce at VWAP. Like that wasn't what he was doing. Like all I was reading was about, he invested in Bank of America at $3 a share, when the banks were getting smoked, like he's been holding Coke. He's been holding Coke for, 45 years,
he eats fucking fast food every day.
Yeah. Like Bank of America. I mean, not Bank of America. Apple. Yes, Bank of America. But Apple, Apple, he bought it like $4 a share. Amazon, like this is what I was focusing on, and that's really what I focused on. So I didn't really, know too much about technical analysis, let alone hear about it. Like that was like a whole different world for me. Like when I had found out about technical analysis. Now again, remember, like I was like 14, 15. So I not only was I not the sharpest tool in the shed, but my mind was still, developing. Yeah, a little bit. So fundamental analysis is where I started, and also it made perfect sense to me. Like fundamental analysis makes sense to me. Basically, if the company is healthy and growing year over year at a certain rate for a number of years, it should continue that trend. Like that makes sense to me. Where technical analysis, it was like, like what happens if it doesn't bounce there? There was just
what's that saying? Everyone, if technical analysis worked, everyone that knew charting would be a billionaire.
Yeah. Mm-hmm. And to that point, obviously, fundamental analysis, again, like
it can go wrong too. Some CEOs can be some sketchy individuals,
God. Especially now. Like,
I mean, dude, we were, or at least a couple of FinTwit people were like friends with with like some CEO, like the AHT. When the AHT went on like an interview saying, "Oh, it's the people on FinTwit, like Zach and all these people that find
That
you,
was
you don't
wild.
find them," and then he drops an offering like 2 days later.
Yeah.
We won't find you again, big dog.
Yeah, that was pretty wild, honestly. Yeah, that was pretty wild. So what I'm saying is that I look back and, fundamental analysis makes the most sense to me because it's hard physical data. Now, the problem with fundamental analysis is that it's also lag. Like technical analysis, I can see what the market closed at today. I can't see how much cash Apple has today. Again, is that I can use numbers and I can use statistics to create data sets, but realistically, I can't see how much cash they have today. And so that's something that, that at the time when I was first learning about fundamental analysis, that was like a double-edged sword for me because at the time I thought that was fantastic. Like I can figure out it, like, and this is how naive I was and how young I was, because at the time I was like, oh, they've spent $3 million every quarter. Like, why would it be any different this quarter? And then all of a sudden they'd be bankrupt. I'd be like, what the hell, guys? Like, you were only supposed to spend
good last time.
That's literally what it was. I was like, I thought we were all in this together. And again, that's how naive I was. And then the China Hustle came out, and that's
changed your life.
Yeah, exactly. And everything was a lie. I genuinely remember watching. Okay, we're really going to. This is a tangent episode a little bit, but if anyone that hasn't,
I think that's what podcasts are.
God, yeah. If for the love of God, please go listen to we'll go watch the China Hustle and then go listen on audiobook to The Complete Turtle Trader. I'm telling you, it'll change your life. Like those two changed the trajectory of my life. The first one, The Complete Turtle Trader, being because that got me interested in stocks. And well, I could talk about that all day. However, I love stocks. And then China Hustle opened my eyes to like, wait, I thought everybody was like in it for the investor. Like I thought they were supposed to be.
It went from here's all the good things about stocks to, oh shit, there's some bad sides too.
Yeah, it was like, hang on a minute. It was like, what do you mean not everybody's out for the shareholders' best interest? And then it's like at one point in the movie, it was like, and if you guys aren't watching on YouTube and you guys are listening on Spotify, I'm using air bunnies and I'm saying, we're out for the best interest of the investor. And to me, that was like a wild concept that like not everybody was in it for the investor's best interest. And so needless to say, those two changed my life. But fundamental analysis is still extremely important, especially when we get into bear markets. Because most of the time, and again, you can look up market cycles on your own time. But when you look at market cycles and you look at, and again, we could just use like the slope theory, when you're going up the hill and everything's going fantastic, most times stocks get away from their fundamental range and where they should be trading at and their true valuation. Then we hit the climax, which is usually the peak of that cycle and that euphoria and all of that. And then we have the backwards, down the other side of the hill. And, again, what comes up must come down. And so that's where I personally feel, and currently what we're in, bear market rallies or bear markets, that's where I typically feel that fundamental analysis is the most important. And that's because, when things go, again, slope theory, when they go up the mountain and then they're coming back down, I can get a really good sense of where they should be trading at. So let's just take Tesla. If I know that Tesla's trading at $270 per share and we just entered a bear market, well, I'm going to want to, add that to my long-term portfolio eventually, but I don't want to add it until it's near its true valuation. So I can figure out its true valuation and how closely it trades over the last 25 years to that valuation metric. And then when it hits that metric, I can start buying shares. And so that makes like young Henny, that made perfect sense to me. Like that was like, I was like, oh, that's it? Like I just got to wait for bear market rallies, figure out the true value of the company, wait for it to go there, buy it and sit on it. Okay. So that's the good thing, again, is that it's the data is there. The metrics are there. You can go as far back as you want. And it's data heavy, which personally, like I like being a numbers person, like I love. That's the good side. Then we have the flip side. Which is fundamental analysis is fantastic to figure out the true value of a company. However, as we've seen most recently with 2008, just because a company was overvalued and it comes back down doesn't mean that it can go into undervalued territory. And I typically think of Amazon because obviously Amazon is one of the most successful companies on the planet right now. I think of Amazon when, it went from the dot-com bubble, went from $108 a share to under $10 a share. And that's another instance where, it definitely went back to value point, to the valuation metric, and then it also went under. And when it goes under, that can be the scarier part. When it goes under the valuation than when you're holding a stock down to valuation. And what I mean by that is that, let's just say that I originally buy Amazon at $2 a share. Okay. And it goes up to $100 a share. Well, when we hit a bear market and that backside of that slope and, the Amazon price is dropping from 100 to 80, I might not be that worried about it because again, I know that fair market value is, let's just say 50. It's still way above my cost average. And then we get down to 70. I'm like, great. Like this is going to give me, a chance to buy right at market value. Then it goes down to 50. And I'm like, great. Like we hit fair market value. So then I buy a few more shares. I bring my average cost up. And then we go down to 30. And now I'm like, wait. Why isn't everybody buying Amazon right now? Like it's below its valuation metric.
Yeah, is it tough to have like the same conviction that you can in technical analysis and fundamental analysis because it's over like a longer period of time?
Exactly. And that's the difficult thing is that it's a lagging, similar to our lagging indicators in technical analysis. It's lagging because, next quarter, that company might show an 80% decrease in revenue. But you're not going to know that until after, or let's just say that, the price is getting smoked. Its top shareholder could have sold everything into the bid and known that something was coming before you even know it. So not only are you going to get smoked on the price because someone's dumping the supply, but then on top of that, you're going to get smoked when the news comes out. So that is the hindrance.
All right. Well, before we dive too much into fundamental analysis on our first episode for it, do you have anything else you want to dive in for the first episode?
No, I think, we wanted to keep this really, we wanted to keep this super, shallow in the beginning because we will get farther into it, as we did with technical analysis, we will get more into it inside later episodes.
All right, cool. So we'll see how much time we have. So we do have a good bit of questions in the inbox. However, with Hugh being gone for a couple of weeks, we do plan on having a couple Q&A episodes. So if we don't get to yours, obviously we will. And if you do have a question, feel free to email to team@penniesgoinginraw and we'll definitely get to it. But today we're going to start with Spencer's. And if we have time, we have one more that we'll get to, but he had two. So let's try and get to him. So Spencer asks, his first one is, what are some things that you always look for to confirm a breakout so that way you don't get faked out? I like the rhyme. So Hugh, I think, how we talked about your matrix for fundamentals, and I guess we'll get to this in an episode pretty soon too, because Hugh has a matrix for when to buy and what makes it a good buy, and more and more and more. And he has the scale, and it has different levels, and a 10 is the one he really wants. Which one do you kind of have the same thing for technical analysis and breakouts?
Yes, definitely. Definitely 110%. So what I want to see is and this counts for breakouts and breakdowns, is that I want to consistently see that level being a brick wall or a fake out spot. So, obviously this comes out on Wednesday, September 7th. Go back to my tweet from yesterday, September 6th, and you'll see on there, I did a thread about my levels specifically. And on like the fourth or fifth tweet, I'll just peek real quick. I talk about, so on the fourth tweet, I show, a chart with my levels. And so one of my levels, it keeps getting hit and it'll wick above, but then it wicks down. And so I'm not necessarily every time that it hits that level going long or short. I'm a reactionary based trader, which means that I'm not trying to predict the future, meaning that if it hits that level, I'm instantly going to buy. Now, sometimes I do, or sell, depending on what we're doing. However, most trades, I'm looking for it to react at that level. And so again, like if you look back at yesterday's level, we had hit my level and we had even gone above like 10 or 15 cents. But then the 5-minute candle and the 15-minute candle closed below that level, showing a rejection. And then you see the next candle, and the next candle was a red candle, again, bouncing off that level. And then again, 4 candles later, it came back up to that level, it tested it, and again, rejected it. And so then I'm waiting for failed follow through. So I'm waiting for it to go below there, to go below that previous support. And that's where I'm getting short. Okay. And now I have really good risk to reward because my stop loss is going to be above that level. But again, is that we're showing confirmation that that level is being a brick wall and is showing great rejections off of that level. So that's what I'm looking for from the short side. Again, I know that you asked for a breakout, but that's because I literally just talked about this yesterday on Twitter, and I know that I have a thread, right at one of the beginning of my tweets. Now, so those are for the shorts. For a breakout, what I'm more looking for than a short is that I'm looking for it to break over my level and then kind of sit there on that level. And so what I want to see is that I want to see a big explosion through that level, come back down, test that level, and hold there. Okay? So, I know a lot of traders like to buy the breakouts. I do not. I don't trust breakouts because 8 out of 10 breakouts fail. So what I'm looking for is that I'm looking for a breakthrough. I'm not buying that breakout. I'm going to wait for it to come down, hold, confirm support, curl back up, and when it breaks out above that level, that's when I'm going to go long. And so this is this is what I use. It gives the best risk to reward for myself, and typically, this leads to a really high win rate for myself. Because again, is that I am waiting for confirmation.
All right. So his next question, what do you guys recommend on how to set up stop losses? Some people just say 1% to 2%. And some say they use the 15 ATR and some others. What do you prefer? I think this is good because, there's so many different types of risk management levels for this. And since we're doing fundamental analysis, it's good because, technicals and fundamentals, they can have different ways that you'd want to set up your stop loss.
Yeah. Yeah, so really good question. And I think this depends. So I'll say why it depends, and then I'll give you what I do. And so I think that this depends because I think it depends what kind of trader you are. For me, I like to use levels on the chart. So I'll, like we always talk about, I'll go 2-3 weeks out of the money, or sorry, not out of the money, 2 to 3 weeks expiration on options, and I'll use the chart. And so sometimes my stop loss is going to be 5%. Other times my stop loss is going to be 15%. Now, if you're someone who, you like going shorter expiration, maybe same week, hell, maybe even same day. Well, the difference inside your stop loss using the chart can be 40, 50%. And again, maybe that's okay for you. But for me personally, I like to use the chart and I like the risk off approach, using the chart and going higher or lower. And again, or, sometimes it's higher or lower depending on the chart. But again, I leave myself so much time, or even if you're doing equity, like the way that I like to do it is that I like to, pick my key level, pick my spot, pick my, like we just talked about, pick my resistance spot. And then my stop loss is a little bit above that level because I still want it to have breathing room just in case it's trying to break, trying to fake out and then dump, or, try and break down and then wick up. So typically what I'll do is that, it'll either be like 15 to 20 cents above that level of mine, if I'm going short, or if a 5-minute candle closes above that level. And same thing, but inverse on the long side, if I'm going long, I'm going to keep my stop loss right below that key level of support, or again, if the 5-minute candle closes below that level.
Alrighty, and our last little topic we wanted to go over, obviously Bed Bath & Beyond's been a pretty big subject recently, with it going up 600%, and their CFO it's been ruled as a suicide out of his high-rise in New York. Crazy, sad shit. I mean, he was being sued for responsible, I think, for $1.2 billion of fraud, the allegations, and he apparently did it with his wife still in the apartment, and he didn't mention it at all, just jumped out. I mean, what do you have any thoughts on that? I mean, not really much.
It's so incredibly sad, like all around. It just stinks for everybody involved. He had a really impressive career resume. He had a family. It just makes it really, really sad for everybody involved. Like his family, obviously, whatever he was going through. And who knows, maybe it wasn't even to do with BBBY. I know that there's a lot of speculation out there, but it just really stinks for everybody involved. My heart just goes out to all of them. And, I don't know. It's tough for me to speculate. Maybe he did something that wasn't necessarily ethical. I know that there's a lot of speculation out there with the whole fraud thing. And, it looked like he profited a pretty good buck off of that, 7 figures personally. And of course, he is responsible for, the financial nature of the company. So it's just a shame for everybody involved. And I don't know. That's really all I got. I don't know.
It's tough to speak on. We're obviously not the best for it, but
yeah, I don't know. It's just all around. It's really a shame.
Obviously, rest in peace to him, and hopefully, it all gets resolved, and his family's okay. Anyways, we'd like to wish everyone a great rest of your week. We hope you all have a great trading week, and we'll all see you next time. Peace. Love you. Bye.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.